We will now move on to the next problem in AS12. A fixed asset is purchased for 20 lakhs. Government grant received towards it is 8 lakhs. Residual value is 4 lakhs. Useful life is 4 years. Assume depreciation on the base of straight line method. Asset is shown in the balance sheet net of the grant. After 1 year, grant becomes refundable to the extent of 5 lakhs due to non-compliance with certain conditions. Pass journal entries for the first 2 years. So let's pass for year 1 and then year 2 then. Now, when you receive a grant, this is in relation to a fixed asset. What is the treatment they have followed? Asset is shown in the balance sheet net of the grant. So they are reducing the grant from the value of the fixed asset. So it is in this context we need to pass the entry. So what is the first entry? Fixed asset account debit to bank is 20 lakhs. Number 2, when you receive the grant, what is entry? Bank account debit to fixed asset 8 lakhs. So these are the first 2 entries. Fixed asset account debit to bank is 20 lakhs and then bank account debit to fixed asset will be 8 lakhs. Now we need to compute the depreciation for year 1. Let's start working out it. What is the cost? Cost of the fixed asset, it is around 20 lakhs. What is the grant? Grant received is 8 lakhs, right? So what is the value net of grant? It's going to be 12 lakhs. What is the residual value? 4 lakhs, right? So what is the depreciable amount? It's around 8 lakhs. What is the useful life? 4 years. So what is the depreciation? It's going to be 2, right? 8 by 4. So there you see the entry. Depreciation account debit to fixed asset account 2. So you can take this as working note number 1. We can actually consider this as working note 1. How to compute the depreciation for year 1. Right? Okay. Having done that, what is the next entry? We will transfer the depreciation to the P&L account. So the next entry is going to be P&L account debit to depreciation. This is done. Now, when you come to year 2, what is happening? The grant is getting refunded and they have quantified the value of the grant is getting refunded to 5 lakhs. So when the grant is getting refunded, the entry to be passed is the reverse entry, which is fixed asset account debit to bank is 5 lakhs. So when the grant is getting refunded, the entry is fixed asset account debit to bank. Okay. Now, what is the depreciation charge for year 2? This is important. We all know that the depreciation charge for year 1 is 2 lakhs. But what is the depreciation charge for year 2? This is important because now we have a special scenario in year 2, the grant is getting refunded. Okay. So what is the value of the asset in the balance sheet at the end of year 1? Let's try to look at that. Cost is 20 lakhs. Grant, we have already reduced the fixed asset. So it's going to be 12 lakhs. Depreciation charge for year 1 is, this is for year 1. This is for year 1. It is 2 lakhs. So 20 lakhs is the cost of the asset. Grant received is 8. So that makes the value of the asset to be 12. If I reduce the depreciation, it is going to be 10 lakhs. So the value of the fixed asset in the balance sheet is going to be 10. How? It is going to be 20 minus 8 minus 2. Now what is happening? I am passing the entry fixed asset to bank to record the refund of the grant, right? I am going to add the value of 5 lakhs here. So the revised value becomes 15 lakhs. Now what is the useful life now? remaining useful life. I would say remaining useful life is 3 years only. Okay. But what is the, and before that, let's talk about the residual value. So let's talk about the residual value. It's again 4 lakhs. So what is the useful life? 3. So what is the depreciation charge? Is it not 11 by 3? Which is 3.667. How? 15 minus 4. The revised cost is 15 lakhs. This is the revised cost of the fixed asset. Right? From that, if I reduce the residual value of 4, that will be 11. Right? So 11 by 3, that will give you 3.667. So this is the depreciation charge for year 2. So I repeat for the benefit of those who might find it a little difficult in this computation, I will repeat. Working note number 1. Let's take this as working note number 2. I will explain working note number 1 again, and then you can take working note number 2. Working note number 1 deals with the computation of the depreciation for year 1. Asset cost is 20 lakhs. I am receiving a grant of 8 lakhs. So the accounting policy followed by the company is that we will reduce the grant from the cost of the asset. So the value of the asset net of the grant is 12 lakhs. Residual value is 4 lakhs. So the depreciable amount is 8 lakhs. Useful life is 4 lakhs. Therefore, depreciation is 2 lakhs. Now, once we find out the depreciation for year 1, if you want to know the value of the asset at the end of year 1, it's going to be 10 lakhs. How? 20 lakhs minus 8 lakhs minus 2 lakhs. Now the grant gets refunded. That will be added to the cost of the asset. So my revised cost of the asset is going to be 15 lakhs. Okay. Once that is now, what is the residual value? It is 4 lakhs. So probably I will add one more line here to be things be pretty clear. What is the depreciable amount? It's going to be 11 lakhs. I know the useful life is 3 years. So depreciation is 11 by 3, which is 3.667. We pass the entry, depreciation to fixed asset is 3.67 or 67, and we'll transfer that to P&L. So 3.667, we can just round it off to 3.67. Hope it is very clear. So you can copy the both the working notes, working note number 1 as well as the working note number 2. I'm just showcasing it for your ease. This is working note number 1 and this is working note number 2. Okay. So that's the end of the problem. Important problem. Practice it. Thank you.